Hey guys, it's Ricky with Techbud Solutions. So we have my cousin Horacio and then my other cousin Michael. So they're also in Techbud. But pretty much we just wanted to do, again, our weekly talk. So how this works is you guys can message me like we're doing on GroupMe, or you guys can message me on Facebook if you guys have a question or want me to elaborate on anything that we're talking about. But I'm just going to go through some picks that are some stocks that I'd say, keep an eye out for that are kind of in the level of what we're at least that are in the market for us to trade, so that have possibly a 10% potential and stuff like that. So I'm going to be sharing my screen in just a bit, and then we'll be going into detail about the safety nets and resistance levels and why this is a stock that I'm picking. Just go ahead and give me one quick second. But again, there is a 10-second delay, so if you guys send me a message, just know that there's a 10-second delay, and I won't be able to respond right away. Well, other than that, we should be good to go. This should be over around 9:30, so within 30 minutes. There's a couple that were coming back into our area of trading. Eagle had a pretty big spike. I believe it was last week or the week prior, and spiked up, to like 50 plus cents. And then now it's, sub 40. So it's trading around the area that we're used to trading it. It was actually one that we traded pretty well, even though it did end up spiking up quite a bit. We were able to catch, the safety nets and resistance levels for that stock itself. And then I believe I traded it twice, and I made like a little bit over 300. And then we had a buddy that traded it and made a little bit over 400. And then a group as a whole, we made a little bit over, or at least like 5 people trading, made it over $1,000 for that day. But yeah, there's quite a bit of stocks that are coming back down to our level of trading, or just our comfort zone. So yeah, so I'm just gonna give it some time also for you guys that are tuning in right now, just getting everything all set up. I am gonna answer a question that is quite popular, and it's how much money do you need for trading or to start out? There is no exact number. I mean, the easiest way that I put it is you should only be trading like money you don't mind losing. So if you trade with like $100, if you lose that 100, that it's not going to devastate you. Obviously, I mean, you don't want to lose anything, but when it comes to trading, it doesn't matter how much money you make. If $1,000 and you lose that, kills you, then you shouldn't be trading with $1,000, just because the possibilities are always there. It's just the best. You guys just have to get the principle of only trading with the amount of money, especially when you're starting out, that you don't mind losing, because you never know. I mean, you might make a mistake. That mistake might cost you $1,000. But if you understand the concept of trading, and you understand making that 10% every single time you trade with $100, once you kind of discover yourself as a trader, then you can grow your account. You can fund it a little bit more, start trading with 5,000, and implement the same skills of hitting that 10% margin, but now making more every single time you're trading. You're still making the same percentage, but now you're trading with a larger account. So instead of making $10 on every trade, now you're making $500 on every trade, which is definitely possible. All right, sweet. So I'm going to start sharing my screen. Thank you guys again for being so patient. And yeah. So again, if you guys have any questions, message me on GroupMe or through Facebook, or you guys can comment below, and then I can answer like that. All right. Alrighty. So Dust is one that I started trading when it went below its usual safety net. So if you look at Dust overall, I'm gonna kind of change the settings. I like doing the candlesticks, which is a standard. So Dust overall, it's a gold mining company, and has its ups and downs. But pretty much what you want to look at is even that 2-day period seems like there's a lot of movement within the company even within those 2 days. So like it was trading within that $7 mark, and it's gone down all the way to 521. So what that means is, there's obviously a downward momentum. So even though it's not considered a penny stock, it's definitely something that's highly volatile, especially in this huge drop right here. So the thing that I saw is when it hit that area, that safety net area. So if we go within if we go within like a 10-day increment, we can kind of set a safety net right around 557. This is one that I was talking about, at least to our group, that every time it hit around that 550 to 560 area, it ended up picking back up. And as you can see, within this 1 month, that every time it would hit that area, it spiked back up, and then it would give us that 10% potential. So if we're buying in at that $5.60, we'd essentially need to make 56 cents per for the trade. So 56 cents, that means we'd have to be selling around 610, which definitely was possible because a resistance level for trading this was around 613. So, that gave us some, at least a better understanding of what we have to work with. So if we can catch it right here, then that's obviously a good buy-in. At least within, when it did end up hitting this, it picked up a little bit, and then the next day just spiked down. So right now it's trading about 521. So it's kind of unknown territory. So what I'd say, if you see upward momentum, as we kind of saw at the end of the day, as it was, trading around, it went down to 511, I believe, is the lowest it hit, and then it started picking back up. I mean, this still has the possibility to hit, that 613 margin that we're trying to hit. But again, I'm only shooting for that 10%. So what that means is if I'm buying in at around 521 or 520, just to be a prettier number, then I'd be looking for a 52-cent gain. So what that means is I'm okay with selling around. So now this is now my safety net right around here, as long as it doesn't go below that. And our new resistance area is right around this. So now the old safety net now becomes a new resistance level. And you see that a lot when you're trading stocks or just with trading anything. So once you pass a certain area, so let's call this range 1, range 2, and range 3. These are different, areas that dust trades in. It usually stays around stage or range 2, but when it passes that, now range 3, it has a different safety net, which is up here. And then it has a safety net. I mean, this is a resistance level, and it has a safety net right around the $6 mark. So what that means, it struggles to go below it. But when it does go below it, now it begins to trade again within range 2, and then it bounces in between these two lines. And when it goes below it, now it trades in between these two lines. So now this is a resistance level, and this is a safety net. So I mean, that's perfect because that gives us our 10% margin. So let's say I actually bought into dust, and I'm trading with about $5,000. So if I see my 10% potential, which I definitely do, if I see it and then it hits that 562, I know that's a good area to sell at, and that's my 10% margin. And with that, I can, lock in my $500 profit and kind of go from there. Or not $500 profit, just because this stock trades for, 521. But yeah, that's pretty much my analysis on dust. Safety net, I'd say, is around for dust. So I'd say this is one to keep an eye on. Definitely do your own analysis when it comes to trading it. But I'd say a possible good buy-in, as long as it holds itself, would be around 520. Just know that it has gone to 511, but I think Monday it's going to start to pick up. And with that itself, I mean, just make sure that when you're buying in, you're seeing that the upward momentum, and just know if you're buying in up here, that's going to be possibly too high to be buying in, and you shouldn't be buying in when most people are selling in that area. So yeah, just I'd say set your alerts at around 520, and then another alert around like 555, as you can kind of get an alert on when it's picking up. And again, this is for dust. The next one is going to be Gale. Gale has been on kind of a constant decline, at least for the past week, since it spiked up so much. So it had a huge drop overall. That's kind of changed. So it had a huge spike, and then ever since then, it's trading around that 34 to 38 cent area, which is kind of like our comfort zone. And it spiked up, plus to above 50 cents, and it's been on a constant decline. It's been holding right around that 40 to 50 cent area. I mean, this week I'd say set your alerts around, if it ends up going below, so I'd set an alert on when it goes, sub 42 cents, because if it goes below 42 cents, then you're going to see quite a bit. So let's consider these ranges again. A safety net is right around here, and another safety net on range 1 will be around here, and then this will be an area around here. So again, range 1, range 2, and range 3. Right now it's trading around range 2. So set your alerts at 43 cents if the stock goes below, or if Gale goes below 43, and set your alerts if Gale goes above 48 cents. And I mean, you still have your 10% potential, because you're only needing a 4-cent gain. So let's say it begins to pick back down and it goes around the 44 cent area. You by selling at 48 cents, you still have that 10%. So as long as you see upward momentum, as like it did right here, and you can lock in that 10% gain, just know that there's a resistance level right around 48 cents, and you can still kind of ride it in that sense. I'd feel more comfortable buying in down here, but again, you never know if it's going to continue dropping. But just know that these are kind of the critical points when it comes to trading Gale, and you can set an alert for this overall. Did that one. Eagle is one that was just one that I was talking about. This one was pretty. This one also had quite of a spike, just like Gale, spiked up, above 40 cents, and it usually trades around 32 to 38 cents. At least within like the last month, it had quite a big of a drop. So with that, it tends to sit around this 32 to 40 cent area, and now it looks like it's been on a constant decline. So in the opening hours of Monday, so tomorrow morning, kind of see if it goes below 38 cents, then just know that most likely it's going to end up touching back right around here. As you can see that every time it touches down, it ends up around 34 cents. It tends to pick back up. I mean, not always, right? Because it's happened before. But just know that this is a safety net, so it's kind of like a critical point. So if you see it touch 34 cents and then you see it picking back up as you saw it here, then just know that that could be a good possible buy-in. And if you're trading at 34 cents, then you essentially need a kind of like a 3.5 cent gain to hit your 10%, which is if you buy in at 34 cents, then you selling around 39 cents to 38 cents, you lock in your 10% right there alone. And then I'm gonna kind of do the ranges for you as well. Actually, that shouldn't be considered a range. Right there. And right there. I mean, kind of ignore the colors. That's kind of just for me in a sense. But this is a safety net. This is our resistance level. This is range 1. When it goes above this is range 2, which is currently trading at from 39 to 45 cents. So they can be called like your critical points. And once it goes above 45 cents, it tends to trade around, the 55 cent to 45 cent mark. And yeah, I mean, I'd definitely say that Eagle is one to look out for. And just know that, every time that you buy into Eagle, that you see that 10% potential. So, the critical points again are 34, 39, and 45 cents. But make sure you're seeing upward momentum every time you're trading. And I'm going to kind of slow down after INVT and then have my cousin Michael talk a little bit about what he's been trading, and then kind of go from there. So pretty much with INVT, this one's one that one of our traders, his name is Zach, that kind of introduced us to. And it's had quite a, it's been having constant spikes. Right now it's kind of trading around areas that it usually doesn't tend to stick around. So that's kind of, different for INVT. But pretty much overall, if you see where INVT mainly stays at, it's usually above 40 cents. So what that means is it tends to trade within 140 to 150. So right now it's trading around that 30 to 39 cent area. So what that means is this is a possible good buy-in. So I ended up buying it at 130, and I'm still holding with INVT, and right now, I'm at that 10% mark. So I'm almost at my 10%. Well, I'm not at my 10% mark. I'm at that almost 10-cent gain. So I'm going to essentially need 3 more cents to hit my 10-cent gain, or 10% gain, and then I can lock in my profits. But with INVT, I definitely think that it's a good buy-in. If you see this huge spike, I bought in at 140 and sold at 215. I believe this was one of the big spikes that we're talking about. It ended up going to 215 or 230, but I sold at 215, and then I made about like 700 on that one alone. But it tends to trade around that 140 to 150 cent area. So for us to keep it realistic, we try to just understand that. So we understand that around the 140 is usually a good buy-in. But now that it's trading around that 130 to 140 cent range, we want to make sure that every time we're buying in, that we see upward momentum. So let's say we bought in at 135 and we see this picking up as you did here, then that shows positive action within the company, and then that kind of allows us to make the decision of this is definitely a stock that we can look out for, or possibly trade. And I mean, that's pretty much it. I'd say if INVT starts picking up and you see it kind of grow within its volume. So, I mean, just kind of look at its history, look at the volume that you would see here. So right now, if you see the volume, which sits around right here, so I'm going to be hovering over this huge spike. The volume was 529, and usually when it tends to play around is, 8 or 3 to 8. So right now the volume is pretty low. If you see a huge spike in volume and you see it picking up, then just know that that's possibly a good buy-in, and you can kind of make your decision from there. So I'd say 130 to 140 cent range would be my area to buy in, and the 150 to 160 range would be my area to sell. And then we can kind of split these up in ranges again if you guys feel comfortable doing that. So again, this is range 1, range 2, and range 3, and then we can kind of go from there. So let me go ahead and all right. So Michael's going to be talking a little bit more about the stocks that he was trading. That's not Michael. That's Michael.
What's up, guys?
So he's one that's based here in California. Well, he's actually my cousin, but he's one that started trading with us. He's not one that trades with us all the time with Techbud, but he's definitely one that hops on, when he has a day off. So it's definitely cool to be able to make, if you're trading and he's trading usually within like $200 to $500, and if he can make that 10%, then that's great. He's growing his account more than he would in the savings account, and then with that, he can kind of implement the same skills he does with that. And if now that he sold his car, which was a higher priced car, he can kind of fund his trading account or his Robinhood account a little bit more. Now, if he's trading with $1,000 to $5,000, then making that 10%, now he'll be making a little bit more of an income when it comes to trading. Let me see. Oh yeah, that's a good one. All right, so I'm gonna be sharing my screen, or actually I'm gonna have him talk to you, but on my screen. So I'm gonna be looking up the stock that he wants to talk about. And thank you guys again for putting some time away on your Sunday to kind of tune in and stay up to date with what we're trading. I should be back in Arizona within 2 days. So for those that are locally, just local traders in Arizona, feel free to message me, and then I'm going to be having a couple people over at my house to kind of just get you guys started and then answer any questions that you guys might have. So if you want to switch spots with me real quick, and then you can kind of navigate. Okay. And again, if you guys have any questions, please feel free to message me on GroupMe, Facebook, or comment below. All right, so I'm going to be sharing the screen. Where'd it go? All right. just so you guys, I mean, the reason I'm switching spots, it's because you guys usually hear me when it comes to trading. So I want you guys, I mean, different traders have different ways of kind of talking about what they're trading. So if you guys don't necessarily understand me or like the way that I talk about stocks, then maybe, you know, the way Michael kind of analyzes or does this. I mean, these things are called technical analysis, as you can see up here. So it's pretty much just your analysis on the company itself. So hopefully Michael's analysis can be understood by different traders. Oh man,
let's see how that's gonna take you out to. Let's go back to it. Cool. So what's up, guys? You guys might not see me involved as much on the GroupMe account, as like Ricky said, been doing this kind of part-time, not too much. I have other things going on that I've been focusing on too. A couple stocks I like to, or my favorite one actually has been Rex as my stock, or there's a couple ones like INVT that Ricky was talking about. But I usually kind of right now just focus on Rex just because I do this part-time. I like keeping it with companies that I know. I don't have too much time right now to focus in, but like Ricky said, I did sell my car, so you guys will see me involved a lot more with Techbud and in the GroupMe account. So pretty much kind of like what Ricky's saying. You might not like my technical analysis, you might like his more, or vice versa. Everyone's gonna kind of have their own technical analysis, and it's gonna be based off what they like. But usually what I end up doing, the reason why I like Rex is because it's consistent. He uses Fidelity a little bit more than I do. I usually just stick with Robinhood, or I have a couple other different apps. But let me go ahead and show you guys just from a 1 month perspective really quick. So what you guys can see, or actually, no, let me do 3 months because, this is why I don't use Fidelity. It's a little bit different. Well, let me show you what the 10 days. Pull up that chart again.
All right. So what I think Michael is trying to say about Rex, I think a really good example for people that don't trade too often, a good idea is I kind of assign for new users a specific stock, and I kind of just have you guys just stick to that stock so you guys have a better understanding of, you know, how like, let's say, for example, how Rex moves in a sense. So like what good areas to buy in are at, what good areas to sell are at. So Michael, was, you know, introduced to Rex pretty early. So that's one he's been sticking to, in INVT. And those are probably one of the most popular ones. So INVT, Rex, and Eagle are probably the most popular stocks within TechBud for like the new members, just because it's pretty easy to read as a company as a whole with their charts, and it's really easy to kind of discover, you know, where the good buy-ins and where the good sell points are at. And I think this is where Michael has had his most success when it comes to trading. So if you kind of just want to focus on a little bit more about like the safety nets around, you know, the 55 to 59 cent area, and then the resistance levels of 61 cents would 66. Be the first one. 61 cents would be the first one, and then 66 cents would be essentially the second one, and then it has that third resistance level
up top at
right 69. around let's just say 70. Let's say 69 cents.
So when I usually trade, I'm just trying to get the fundamentals down, and I try to stick with that. So I'm not really looking. I'm fine right now. I usually sell, or I'll buy in at 62 cents, and I'm honestly looking for a 4 3-cent gain, just because I'm looking to be comfortable with what I'm trading with. And this is why I like sticking with Rex, because as you guys can see, there's a lot of movement. It always goes down to the safety net. I'm looking at the second safety net because that's where it's usually at, anywhere between 61 cents, and it goes all the way. Oh, I forget, it's a live chat. I don't usually do these live chats. So you can see usually the lowest point is 61 cents, and then it kind of scrolls all the way up to 66 cents. And usually it's most common between 61 and 64 cents. So anywhere between a 3-cent gain. It doesn't matter if you put in $10, $100, $1,000. If it moves up 3 cents, 4 cents, depending on how much you put in, you can get a nice gain out of that movement. So with Rex, it's always consistent. throughout this month, it's always been within the 61, 66 cent gain or 66 cent movement. But if you look at least a month or 3 months ago, it was actually within 70 cents and it moved up to 80 cents. And it usually stays around like 76 cents. And then the highest point's 81 cents. But the thing with, like I said, the consistency, that there's always a movement of between 4 to 5 cents. And as someone that's starting out and they're kind of afraid, to try new stocks or something like that, this is a good company to invest in just because you always see that movement going on. And you can see usually right around here is where you can see by looking at the graph, it always moves up and it's always moving down. It's always hitting around 61, 62 cents. And then you can easily sell within 63, 64. Someone like me that in the past couple of months, I've invested a lot. Rex has always been a go-to spot. So usually in the morning, I set alerts on because I know that it's going to hit 62 cents, 63 cents, and I know it's going to sell at 64, 65. So once I get my alert, and thanks to Robinhood, by the way, if you guys don't set alerts on, you guys should do it because it's going to save you a lot of time. But once I get that alert from Robinhood saying that, oh, Rex is at 61, 62 cents, I'll set my limit order. I learned my dues not by doing a market order. I'll have Ricky talk more about market orders and why you shouldn't do that more. I messed up the first time I started trading. I did market orders and I completely messed up my whole technical analysis. So when I get my notifications from Rex and Robinhood, once it drops to 62 cents, I'll go ahead and put in my limit order, put in however much money I want to invest in, and then right after that, I'll set a sell, or I'll sell in what I want to sell at, usually 64, 65 cents, and I know because of consistency, I'll go ahead and sell in my order. But pretty much that's why I always use Rex. What I'm gonna go and do is I'll hand this back off to Ricky, and then he'll go ahead and carry this on right now.
All right. So again, we don't want to promote any, we're not telling you that 61 cents or 66 cents is a good buy and sell. Obviously, you should do your own analysis just based on the 5-day period that we're kind of viewing right now. It's been staying around so-called, range 2. So if we call this range 1, range 2, and range 3, you could see that Rex as a whole has been staying in between the numbers of 61 cents to 66 cents. So to have a better understanding, this is a good trading area. I'd say a better buy-in area would be around when it goes to 59 to 60 cents, as that would be a good buy-in. And then you could sell within the 64 to 66 cent range. But obviously, always do your own technical analysis when it comes to trading any stock. You should never, no matter who recommends any pick. So there's a lot of companies out there that promote different stocks and they have their daily picks. If you read the disclaimers on those companies, they actually tell you that they are paid by whatever company it is to promote that company at that certain price. So we want to make sure, the reason we make these videos are just so you guys have a better understanding on how to read graphs, why it is that, we find Rex so attractive as a stock as a whole, and why it's such a common stock that it's traded through, Techbuds, or just, as a group as a whole, because of its consistency of, us being able to read, the safety nets and resistance levels of Rex in a sense. So, that's pretty much it. I've said Rex way too often. So that's pretty much it when it comes to the stocks that we're trying to stay within this week. There are a couple more that hopefully can drop into the range. We'll kind of create a list and we'll kind of share that with the people within Techbuds. And then, you guys can feel free to join for free. The link is down below. You guys can join us on Facebook. We kind of tend to have most of our, group chats Monday through Friday, and then we kind of just stay up to date with whatever we're doing within the weekend. And then Sundays, we tend to try to do these every Sunday. So, the Sunday talks. And the reason that we do these talks are just so we can stay up to date with the stocks that we're trading, mistakes that I've made, mistakes that, or kind of not mistakes, but, good things that I did when it came to trading. One thing that I am going to talk about is INVT. INVT, it was trading around that 140 to 150 cent. It spiked up, hit 150, ended up going on a constant decline. I bought in at 139 and I set a stop loss at 130. And the mistake that I learned this week is I set a stop loss at a safety net. And if I was trading, when I was trading at INVT, I knew right away after I set that stop loss that was not a good stop loss. And the reason I say that is because if that's a safety net, it tends to hit that safety net and then picks back up. But I set my stop loss there, which means I bought in at 139, and I said just to secure, how much money I was going to lose if it wouldn't pick up. So I was hoping that it'd go back up to 150. But obviously, not all our picks are always going to do that. So it went from 130, 139, it hit 130 and then picked back up. But because I set my stop loss at 130, it sold. So I sold to someone that got a perfect buy-in and wrote it up. I ended up buying in again at 130 later in the week. But that was my biggest mistake. And the reason I say that's a mistake is because you should set, what I would recommend is setting your stop loss below the safety net. So I would have felt more comfortable setting my stop loss at 129 or 128, and with that, I would have just ensured that if it actually was dropping and INVT was on a constant decline, that at least I sold at a price that I had no idea of. And what I mean by that is, when it drops below 130, that's an area that I really don't understand for INVT. So with that, at least, if I'm losing money, that's a nice point. So what I'm saying is make sure you understand, set your stop loss at the point you feel comfortable selling at, as in like making sure you don't lose more than 10% of whatever you're trading. But make sure it's not at a point where it's such a critical point that it's going to pick back up at that exact point that you're selling, because you want to make sure that you're riding it up. So right when it hit 130, it picked back up and it hit 140 again, and I was kind of just like, crap, but I got lazy, and that's the thing. So that's my mistake of the week that I hope helps you guys out. And if you guys do not know what a stop loss is, I'm going to be making a video a little bit more about it, but pretty much what it means, it's when you're trading a stock. Let's say you're trading Apple and it's trading at $1, and you always want to secure that you're controlling how much you're making. So again, every time I trade, I only trade stocks that I see a 10% potential. So that means if I buy in at $1, I'm going to be selling at $1.10. But obviously, you're trading stocks, it could have a huge decline, and you want to make sure that you don't ride that decline all the way down, or that, drop all the way down. So what do? You set a stop loss. And what that means is when it hits and it goes on a constant decline, and you set a stop loss at, let's say, 95 cents, when it hits 95 cents, your order to sell will fill at 95 cents. And at least, even though you did lose, 5% of whatever you're trading, at least you can control it. So the whole thing about trading is if you can control how much money you lose, then at least you can kind of have a better understanding of how much money you can make. Because if every time I trade, I make 10%, and then my average ratio for trading, I have like an 87% success rate. So every time that I lose, if I'm only losing 5%, then that's how I'm going to make money. Because the whole reason that you're trading, the whole reason that we're all here to trade the stock market is to make money, right? So the only way that you're going to be able to do that is if you can control how much money you lose, even though that sounds ridiculous. And that's one of the most difficult things when it comes to trading, is because no one wants to lose money. But I'd much rather lose $10 than lose, $1,000. So if you're trading with $100, then just know that 5 to 10% should be an area that you should be setting your stop loss at. And then you should always be trading stocks that you see a 10% potential. So if you guys have any further questions, please comment below. You guys can feel free to join on Techbud. As of now, it is a free group, but definitely, we have different things to come that are kind of get the members with Techbud a little bit more involved. I feel like it's going to be a way better environment when it comes to trading, because what my whole I'm going to be making a video later about that. But thank you guys again so much for joining. I know we went a little bit over the 9:30 mark. But if you guys have any questions, feel free to reach out to me. You guys can reach out to me on the comments below, Facebook, group me if you're already there. You guys can text me if you guys have my number. So thank you guys again. Again, this is my cousin Michael, and then that's Horacio. So thank you guys. But if you guys have any questions, please feel free to reach out to me. And if you guys don't know, then I do have a car that I'm currently selling right now. It's a 2012 GTR. And if you know anyone that's really interested, I'm not thinking of doing any payments on the car at all. I really just am willing to sell it. So I'm only willing to take cash or cashier's check. The car is paid off. So you guys can feel free to reach out to me if you guys are in the market for one of those cars. So thank you guys again, and I hope you guys have a good Sunday.